From the floor of the CME Group, this is Danny Riley and my good friend
Tim Haefke from Top Notch Trading.
That's right. We haven't been doing this for a while.
No, it's just a rare occurrence for a long time now that we've been together, be able to do a video, and it's nice to see my old friend for the first time in a while because I'm busy, he's busy, and we're running in circles with what's going on in the markets.
Oh,
what
yeah,
do you think?
absolutely. And you know, the pit bull came. We were talking about this pickup in volatility even before it began. The pit bull came out and said in the beginning of July that you have to worry about the third week of July into the last week of July into the third week of August, and he couldn't have been more correct. You know, other than just this gigantic movement we've had in the S&P, people aren't really talking too much about the bonds right now.
Well, the bonds are doing some extreme moves themselves. I went from the September contract as the lead month last week, and now December actually became lead month last Friday and into today. But that September contract and these contracts, we had over a 7-point full trading range plus in 1 week. That kind of movement is kind of unheard of. And speaking about unheard movements is how the Dow opens up 1,100 handles lower and rallies 1,000 points. So that volatility that the pit bull was talking about, it's out there.
Yeah, it really is. And now look, let's jump over. We know that there's a lot of liquidation going on in the bond market. The Chinese are starting to liquidate some of their holdings. But when you look at the S&P right now, we're really just in the beginning of this seasonality stuff as you go into September and October. And you think we're going to continue to grind like we've been up and down like this? Or?
Well, Danny, to be honest with you, I put out a video earlier, and I am expecting the S&P to find lower ground in another 150 to 200 handles to the south in the 16 handle. And it all starts with a point of interest I mentioned from last year, October 13th, at 1813 even. Let's put it at that terms. And if that baby goes, maybe those objectives are going to be seen.
Right. Well, that whole 1830. Well, if you take out 1831 or 1830, you're probably going to take out 1830.
Well, the first point of interest is last week's low of 1831.
Right.
And if it turns and we take out that 1813. Here we go. And the volatility will even be a little bit of more.
I think so. Increase, yeah. But you know, the big thing that we're looking at now as we go into today's the last trading day of the month, and what we've been trying to emphasize to a lot of traders over the last month or so is that these MOC orders that we've been seeing turn sellers back in March, and they've been buy, and then at the end of March, these MOC sellers came in at the end of the month and have basically been selling stock at the end of the month every month since we started to notice this. Now, as we saw on Friday, we saw this kind of crazy run-up late in the day, and I was kind of shocked. I mean,
well, Friday, what happens is the markets get exhausted, and to be honest with you, Friday was the smallest trading range since Monday. I mean, we only had like 19 handles in the S&P, and we had about 47 handles in the NASDAQ, but just look at the NASDAQ. They had over 400 handles in a weekly trading range. And the S&P, I believe, was close to 159, 160 handles in 1 week. I mean, talk about some moving and grooving, but we're never seeing the light of day. And I'm going to go back to that channel trend that they were forever in the S&P. And boy, they broke through it. And I also mentioned that in the other video today. So, Danny, what kind of rebalancing do you think you're going to see at the end of the month?
Well, I think that we've seen so much selling going into the closes over the last 3 or 4 months, and it's been accelerated over the last 2 weeks. I mean, every day you get at least $1 billion to up to 3.3 billion sold. I think over the 7-day period there was 11 billion in stock sold on the close. So I'm kind of looking for a little bit more of that going into the close today. And that's kind of why I was kind of surprised the way the futures ran up on Friday, because I really didn't believe it. I thought it was a big phony, and now they come down hard overnight, and then they're kind of going back up a little bit now.
Well, right now all they're doing is showing a little bit of a trade as we can't take out the weekend low, we can't take out the weekend high. We're seeing some more consolidation, and to be honest with you, I'm a firm believer we're going to see some consolidation action until after the Labor Day weekend. So this week, look for some back and fill. One of the most important levels out there that there's a lot of people talking about in the S&P is that 1950 level. So if we can start getting below 1950, maybe we start picking up some steam to the downside. And until then, I can't see why it won't just kind of volley back and forth. And after the Labor Day weekend, I have a funny feeling that's when,
Yeah, well, there is some positive stats that go into the Labor Day weekend. Well, listen, I'm gonna finish this off by thanking Tim, and I also wanna tell everybody that on September 12th, I think I am doing a webinar, and then on September 14th, we kick off the MrTopStep Boot Camp. And if you wanna meet Tim, or you wanna meet me, this will be a great opportunity to do that. And you know, Chicago stock's there, WB's there, we've got a whole room, and we really do believe that we've got a collective of traders. But in addition to that, I also want to announce that we've got this options room that we're opening up that I think is just going to be really, really a knockout. These guys are from Wall Street, they're putting out trades all the time, and I'm really excited about it. But anyways, I'm going to leave it like that. I want to thank my buddy Tim, and I want to tell all you traders out there, keep your stops tight and let your winners run. We'll see you later.